Today we're going to be talking about the best Vanguard ETFs that you should consider buying. Everybody on these financial channels pretty much always recommends Vanguard to newbies or people who want a very easy to investment, and it's reasonable. Vanguard really doesn't have bad funds that are just terrible. And the one thing that I like about Vanguard, because of the unique ownership structure, the expenses are low. I can explain why that is. Oh wow, look at the spider right here. Oh, scary. Anyway, why are the expenses so low on Vanguard? The major reason why is the customers are actually, amazingly enough, the owners as well. Isn't that amazing? When you buy a Vanguard ETF, there's no conflict of interest. You're also an owner somehow in the Vanguard company, so you're somehow able to pass along the cost savings. There's no other third party who is trying to get a lot of money out of you. Why would you rip off yourself? So expenses are extremely low, like 0.04% on some of these funds. That's what I think is cool. If you're a long-term investor, you don't want to spend fees. I remember when I used to be a financial consultant, and we were encouraging the dummies, the customers to invest in these things that would cost like 1.2% a year. In other words, every year 1.2% just would be passively handed off to the fund manager. Well, you don't want to do that. So that's one reason why everybody chooses Vanguard. Now, what are the best Vanguard funds you should choose? I personally like certain funds that are not usually promoted. Everybody says, oh, buy the S&P Vanguard ETF, and that's good too, but that's pretty generic. I think something that I think has a little bit of an edge would be the mid-cap ETF. The symbol is VO, and what I think I like about that is that what is mid-cap? Mid-cap means it's not a super large company like Apple, but it's also not a super small, tiny company that is probably more fragile either. So it's in the middle range. Don't you want to be in the middle? You don't want to be extreme. You don't want to be too big, too small. And then the other cool thing about VO is that it's not a growth fund and it's not a value fund. It actually has it's called a blend. So it has some value and some growth stocks. So as a result, you kind of can take advantage of both, because value tends to do well over really long periods of time because the growth stocks, you're going to pay more for them. And in certain environments, that's fine. Like now, where you're spending more than 100 times PE for Amazon or some ridiculous amount for Tesla. The most important thing is to realize how much you're actually spending in terms of the valuation. And when it comes down to it, if you're blending them, you're kind of getting the benefit of both worlds, the growth and the value. So that's one reason why I think you should consider the Vanguard. It's a mid-cap. It's the symbol VO. Another one that I think is really cool is the Vanguard Healthcare ETF. I think it's VHT. And as you know, healthcare, when is healthcare ever in a recession? Aren't there needs, there are healthcare needs all the time. I can't think of a time period where people say, hey, I don't need healthcare, I don't need to go to the hospital if there are problems. There's always a need to spend money on healthcare expenses, do drug research and things like that. So that's a good one in terms of great long-term potential, and I think it's the one that allows you to diversify away from the S&P into something that tends to do very well long term. Now, one fund that I don't recommend is energy. I've known people who for some reason love the energy sector. I don't know why, because if you look at energy on a long-term chart, a lot of these companies they don't do well long term. They just don't. They tend to have time periods where they do really well, and then they do badly. So if you're going to be holding things long term, you don't want to hold something that does that. So avoid the energy sector, just because it's kind of like a commodity. It tends to do well into certain environments, and then it doesn't in others. So if you want something that holds, you kind of want something that's going to appreciate quite well long term. And healthcare is a good one. The mid cap is a good one. If you're into dividends, the Vanguard high dividend one is a good one too. It's a VYM, I believe, and that's a pretty good one because the dividends are relatively high nowadays, like 3.59%, but it's not so high that it's hurting the fund's performance. So I mean, I know some people are dividend chasers, and then they chase some dividend, some stock or ETF that's paying 9%, but then ETF or stock collapses because that's not sustainable long term. So those are the Vanguard ETFs I recommend. I don't recommend the bond ones just because bonds don't really grow. You want your money to grow, and especially in this time period where the government wants to inflate your money away. So that's one reason why I'm only promoting the stock ones. So let me know what you think. Do you like Vanguard? You think they're cool? I think they are. And this is a time period where you could buy these ETFs. You don't have to even have a Vanguard brokerage account or anything like that. You could use any kind of service and buy these for zero commission to buy and very low annual expenses. So let me know what you think in the comments below, and I look forward to seeing you in another video. Be sure to subscribe and like the video. Talk to you later.